welcome to the part 5 of the weekly market recap. This is the Friday trade. We have literally had trade every single fucking week, every single day. I mean, throughout the whole week, which is fucking unbelievable. We should have not. That should have never been a thing here. We should. It's like this. I said. That's what I said, man. My setups also offers me on a good week, 2 setups a week, or 3 setups a week max. On a good week, usually one setup or no setups. And this week I had set up every single week, so I definitely knew there was something fucking wrong on this week. So Monday should have been no trading day, Wednesday should have been no trading day, and Friday should have been a no trading day. And we're supposed to already have 2 setups this week. But we got fucked up. We took a setup on Monday, Tuesday, Wednesday, Thursday, and Friday. Fucking Tuesday setup could have been every loss here and make us a big fucking money. But we broke it. The market, we broke it too early, and the market had a stop loss at break even. Eventually, market went up higher, paying our draw on liquidity. So yeah, we're fixing it. We just fixed some leaks, fixing our problems. We're just gonna, it's the process to grade this. So yeah, let's go over the the Friday trade, which should have been no trading day, but we broke a rule here, which we're gonna fix. Which this rule was a new scenario type of rule. Now, if we go back to the higher type of drawn liquidity to the setup, which is our drawn liquidity in a higher time frame, was overall bearish. We had a daily CLT to the downside, daily premium IRL to discounted ERL, which is this right up here, as well as we had a big wick here on the weekly time frame, which needs to close at a fair price, which needs to go down and put the wick in, as well as we had a midweek reversal. Wednesday have the week, so there's gonna be expansion, and Friday's gonna be expansion, and we had a daily SMT CRT to the downside, which is our CRT right over here. Now with the lower time frame, market context was a bearish order flow. We had SMT. We had a double purge here, purge at the low, purge at the high. The purge at the high had SMT here. So our main range was this candle, and our range at the low, the purge at the range low. Then the double purge is our drawn liquidity, and as well as that's our drawn liquidity here. That's what we had. The market concept was bearish. We're in a premium of daily range. We want to go sells, and we tell the premium of daily range. We go down. We want to go down to the daily range low. Today, with that, on Friday was stacked with buys here. We were stacked with fucking a lot of market context and narrative. And right over here on the hourly time frame, it says we are looking for a new situation here because lunch made the high of the day. So I'm looking for a new situation. So since I'm looking for a new situation, I'm looking for a 4-hour CRT or hour CRT. We had no 4C presence. We're looking for hour CRT. We're looking to use a smaller range, target a bigger range. At first, we had the 6 a.m. as our range, and the 7 a.m. did purge out the range high, and we're trying to shut it down. But the 6 a.m. The 6 a.m. The 7 a.m. never offers the actual entry to the 6 a.m. candle. So the 6 a.m. range is our range. 6 a.m. high. The 6 a.m. high right over here wasn't a legit high. So market, I couldn't take the trade. I didn't execute it. And I was just waiting for the market to, either give me another setup or no setups here. Eventually, we forced a trade here, which overall went to our loss. And now on the next, eventually, since we couldn't take this, we're waiting for the next candle to close, which is 7 a.m. This is the 8 a.m. candle. The 8 a.m. candle closing in a range. Eventually, I'm waiting for the 8 a.m. candle high to get priced, for the model 1 to happen, and eventually go lower. And the model 1 right over here, this is the actual model 1, which is the register block entry to the downside, which in this case, I was looking to execute it straight here, but the market gave me the wrong model 1, which was a body. I can't take body. I can only take the fucking full candle closure or a consecutive candle closure. I cannot take a body by itself. But our entry should have been the resistance block itself and put a stop loss here and target the lows. So so our range high was our drawn going over the week. So I just got distracted, my bad. Since the 6 a.m. didn't give us the 6 a.m. high, didn't have a legit high, so looking for another range to target it. But I wonder, well, this is a bigger range. But keep in mind, this is a smaller range. There's another bigger range, and there's another bigger range right? This bigger range is a bigger range. So overall, we're looking to use a smaller range to look at the bigger range. So the range wasn't the problem. The problem of this trade was that there was no legit high here. But when it will, there's an equal high here though. There was a bullish bearish candle, bullish bearish candle. As you guys know, an equal high when they're literally equal, not the one that are like this or like this. Like this one that has SMT. This one has SMT. But this one takes a portion of the liquidity. There's people who have their stop loss right over here. They take a portion of the liquidity, so there's not enough liquidity for the market to go lower. Guess what? We can see market go lower here, but guess what? It's not enough. Now over here, there's enough liquidity for the market to go lower. So the lesson of this trade is primarily there should have been no setups here, but the lesson is at the CRT has to low, there must be a valid high, valid low. There cannot be a random ass fucking high or low. It must be either for the CRT high a bullish bearish candle. At a CRT low, it must be a bearish bullish candle. There cannot be an equal highs or equal lows. There cannot be a swing high, swing lows. There cannot be a such from random highs or random lows. It cannot be an equal high where they have bullish bearish candle at a CRT high, or it cannot be a bearish bullish candle at the CRT low. Even though they're equal low, although they're bearish bullish candle, it cannot be like that. It cannot be equals. It can only be bullish bearish or bearish bullish. No random bullish candles, no random bearish candles, no fucking swing highs or equal lows or swing lows. It can only be bullish bearish candle or bearish bullish candle, nothing else, because a equal high, equal low takes out liquidity, which it doesn't take out the whole liquidity, but it takes a portion of the liquidity. So the market, since it doesn't have a portion, since there's not enough liquidity here, market needs to make eventually once it pushes it out, market now here has enough rest and liquidity for the market to go lower. So market can walk all the way up, pushes out that liquidity, damage, it goes lower. So on Thursday, our trade, there should have been no trade here. But the lesson of the execution here is our entry was the body with the CISD. So market on our entry was perfectly fine. And you can see the reason why we entered here, the reason I entered here because of the spread. But we had one entry which was on the threshold. I'm not entered. We had one entry which was on the, on the CISD, and one entry right over here because of the spread and shit. But right over here, our market didn't post it to the downside, so it didn't make sense for the market to go up, back up all of the threshold. Although you can see, market they won't go to the up to the threshold. But I said, this is now our setup. So realistically, since the market did a big impulse to the downside, our entry was not. Since the market doesn't make sense to go back up the threshold, they're losing so much money on that. It would make sense for us to enter the Model 1 itself, which on this candle we can enter on this candle because the RR is very off. So we're entering on the body on this to give us the right amount of the RR. So yeah, we entered here for stop loss right over here, and eventually the entry was fine because I had stop loss right over here. You can see market, we had a perfect stop loss, which was doing the damage part into the story. The execution was fine. It was all good. The reason we didn't enter all over here on this Model 1 of the first consecutive candles because it didn't make sense for the market to go up all the way back up to the threshold. So entering on this, we're realistically supposed to enter on the Model 1 itself right over here. But since the R is off, we're gonna enter on this. Okay, it's because we can't enter all over here, right? So logically, it really doesn't make sense. Although this going to loss, the execution was fine. It was just that the valid high, valid low rule, which is valid high, valid low rule. We had been having this shit for a long ass time, right? And eventually we broke it today, that day. But listenable, we're never gonna break that same rule again. We're never gonna ever gonna break the same rule. We're never ever gonna make the same mistake. And yeah, this is the lesson of the whole week. This is part 5, the last part of the whole weekly market recap. Big lesson, big week, very fucking week, big lesson week. And yeah, very happy of the week, very happy of the outcome. Got cooked this week, I'm not gonna lie to you guys. Our beautiful trade on Tuesday got break even, which was supposed to be a big ass trade. But yeah, this whole week we had fucking FOMO problem. We entered in the wrong fucking entries. We're not supposed to be in trades. We did not press as a shoulder on liquidity, which is all fixed now. Now we wrote it down. Now it's no longer a problem here. Now we wrote it down. We literally are not gonna make the same mistake again. We're not gonna make the same mistake again. Very big lesson. Risk 2% throughout the whole week on each trade. Why? Why not? made sense because it's the eval stage. In the eval stages on challenges, I risked about 2%. On this trade, I didn't take on my small live account or my other funded account because of the, I wanted to fix some leaks. And I knew I definitely had some leaks there still, which is the FOMO problem, which is now fixed. Missing a trade is part of the game, but FOMO isn't. If my setup doesn't show up, I don't trade, period. And that's a lesson of the whole week. I have definitely more or less to talk about here, right? And yeah, the other primary lesson is I do not FOMO win. I will not FOMO win. I will practice short-term liquidity over the long-term liquidity. When the wick is over in the body onto the threshold, I will enter on the resistance block because I have fucking proved. I showed you guys proof in the part 2 of the weekly market recap. I will, when the body is over in the body is bulky and it's over in the wick, I'll enter in the threshold. And how can we? And when the market has a big component to the upside or downside, and does it make sense? And we're supposed to enter the threshold itself. It doesn't make sense to go back all the threshold. We will enter on the Model 1 itself. But the Model 1 RR must make sense, and must be a little cheeky on it. We're gonna enter on that, and the first level right above or below of the bottom of the Model 1, because since the threshold is safe, since the threshold is not gonna get tapped, the Model 1 stop loss is fine. Just putting a stop loss of the body, below the body is, perfectly good stop loss. Wick doing the damage, body tells the story, and we can only trade between 6 a.m. and 12 p.m. because it needs to be right when it hits 12 p.m. we're done for the day, regardless if regardless if you're in a trade or not, regardless if you don't have a trade, we're done. We're not looking at executing. We're done for the day. And the next lesson is I do not break even too early. I break even when my take profit gets hit. I do not break even unless my take profit gets hit. I'm not greedy. I do not break even when I'm up like a couple pips or when there's news around, because I accept the risk. Since I'm in a trade, the trade accepted. So I don't care how much more I lose on a trade, even if there's a news, the CPI or PPI or NFP news, even if there's a news, that risk is accepted. Since that risk is accepted, I don't care how much it was before that, more than that, because all that risk is accepted. I don't enter a trade if I don't accept the risk. I always accept the risk, and yeah, I don't break even too early. I do not try my stop loss too early unless I'm gonna take profit. I use a smaller range to target a bigger range. I'll use a smaller range only as an execution, not a partial or a take profit or a break even. I'm primarily as an execution, nothing else. I purchase that short-term liquidity of the long-term liquidity because I'm a day trader. Because I'm trading a 15-minute, 5-minute time frame. My trades only last a couple of hours or a couple of days. They're very short term. And at the CTS low, there must always be a valid high, valid low, which is a bullish bearish candle or bearish bullish candle at the sell liquidity or buy liquidity. It cannot be an equal high or equal low. It cannot be a bias and bullish bearish candle. It cannot be fucking even same candles. At the equal highs, it cannot be the same candles either. It cannot be the same candles like a bullish bearish candle, right? It cannot be like that candle, the CT high. It must be a bullish bearish. If there's an equal high, I'm looking for repurchase. So if there's an equal high there, I'm looking for the high to get purged. I'm looking for a valid high to get formed, and eventually for that valid high to get repurchased. Eventually get the model confirmation and enter the trade, or I'm not entering the trade at all. I'm done for the day, nothing else. I will only look for valid highs, valid lows. If I don't get valid high, valid low, I'm looking for a retrade. I'm looking for a repurge or no executions. Then if once I get a repurge, once the market forms the right, once the market forms the right in the valid high or low, then look for that valid high will to get purged. Then look for right Model 1 to eventually go lower. The valid high, valid low cannot be a swing high, swing low, or bullish bearish candle to CSU to lows. It cannot be equal high, equal lows. It can only be bullish bearish candle or bearish bullish candle, nothing else. That's CTSU to lows. And that's the lesson. Beautiful lesson here. And yeah. And if I say I'm entering here, I'm entering here. If I say I'm entering the resistance block, I'm entering the resistance block. If I say I'm entering on the threshold, I'm entering the threshold. If I say I'm not gonna take a trade, I'm not gonna take a trade. If I say this, I'm gonna do this. I'm the man of word. And yeah. How can we bypass the threshold entry if the market is impulsing to the upside or downside? Then we're gonna enter the Model 1 itself and put our stop loss, below the body or above the body of the Model 1, and we're doing the damage point to the story. That's only when the market is impulsing to the upside or downside. Then we're gonna enter the threshold. Then we can enter the Model 1 itself and put our stop loss right above or below the body because just so the entry is higher than get retapped. So yeah, it makes a lot of sense. So yeah, big lesson week. I risk 2% per trade. I took the risk. I'm more aggressive. But yeah, we're all good this week. Very valuable lesson week. I'm look back on his journal. Very, very lessonable, viable, lessonable week. So yeah, thank you for watching. Make sure you guys like, comment, subscribe, share, and join us down below. And I'll see you guys later. Peace out. Very valuable week. I love the week. Peace out.